Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Wynn Macau Limited annual report. Wynn Macau Limited provides a wide range of businesses and services to cater to the diverse needs of its customers. At the core of its operations are gaming services, which include table games, slot machines, private gaming salons, and sky casinos. The company also offers 24-hour gaming services for those who want to indulge in their favorite pastimes at any time. In addition to gaming, Wynn Macau provides luxurious accommodations through its hotel, which features spacious rooms, suites, and villas that offer a comfortable stay for visitors. The company's food and beverage outlets serve a variety of cuisines, while its brand name and retail shopping arenas provide an opportunity for customers to indulge in some retail therapy. The resort also offers recreation and leisure facilities, including a cable car ride through Skycab, health club, spa, salon, and pool, allowing visitors to unwind and relax. Meeting and convention spaces are available for business events and conferences, while poker pit games and public entertainment attractions like the Performance Lake and Rotunda show add to the excitement. Furthermore, Wynn Macau is involved in development, design, and pre-construction activities, as well as providing technical consultancy, administrative, and management services. These services support its core operations and enable it to deliver a seamless experience for its customers. Overall, Wynn Macau's diverse range of businesses and services makes it a one-stop destination for entertainment, leisure, and business needs. Wynn Macau Limited market capitalization of $28 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Wynn Macau Limited holds a significant advantage in their industry. Wynn Macau Limited trades at a higher price-to-earnings ratio of 17 times and a lower price-to-book ratio of -2 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced. Investors should evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap. The company exhibits a very high leverage profile, with liabilities accounting for 134% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 8.44%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline in the given context are multifaceted and varied across different sectors. On one hand, casino revenues have experienced a significant increase of +3.8%, while advertising and promotions have seen an impressive surge of +23.5%. Additionally, food and beverage revenue has shown a notable rise, ranging from +2.8% to +11.9%. Furthermore, slot machine win has also witnessed substantial growth, with figures ranging from +9.7% to +22.4%, and gaming taxes and premiums have seen an increase of +4.7%. On the other hand, there are several sectors that have experienced a decline in revenue. Other revenues have taken a hit, plummeting by -10.7%. Rooms revenue has also suffered significantly, with decreases ranging from -21.7% to -26.6%. VIP table games turnover and win have seen declines of -15.1% and -37.5%, respectively. Poker revenues have also experienced a substantial drop of -31.8%, while non-casino revenues have declined by -10.8%. These contrasting trends highlight the complexities of revenue growth and decline in this context. The net income of the company experienced a significant decline between 2024 and 2025, with a decrease of 49%. This drop was also reflected in the adjusted EBITDA margin, operating profit margin, and net profit margin. The adjusted EBITDA margin decreased from 8.21% to 7.48%, while the operating profit margin dropped from 6.33% to 5.93%. Furthermore, the net profit margin plummeted from 10.03% to 6.45%. The reasons behind this decline in profitability are not explicitly stated in the provided text. However, it is clear that the company's financial performance suffered a significant setback between 2024 and 2025. The decrease in net income and profit margins suggests that the company may have faced increased costs, reduced revenue, or other operational challenges during this period. The company's financial performance indicates a positive trend in its operating cash flow. The net cash from operating activities for both 2024 and 2025 is substantial, with HK$0.43 billion and HK$3.15 billion respectively. Furthermore, the net cash generated from operating activities for these years are also significant, standing at HK$7,694 million in 2024 and HK$7,369.4 million in 2025. These figures demonstrate a strong ability to generate positive operating cash flow, which is essential for a company's financial stability and growth. Management is optimistic about the company's future prospects. According to their statements, they expect continued growth in gaming revenue, with an increase of 9.1% from HK$120.18 billion in 2024 to HK$140.2 billion in 2025. This growth is attributed to Macau's goal of becoming a world-class tourism destination, which will drive additional visitation and create future opportunities for the company. The management believes that the Macau market has significant potential due to its location in one of the world's largest concentrations of potential gaming and tourism customers. To fund operations, they expect to rely on cash generated from operations, cash on hand, and available borrowing capacity. They also plan to refinance all or a portion of their indebtedness on or before maturity. Overall, management statements convey a sense of confidence in the company's ability to support its continuing operations and achieve growth in gaming revenue. The company has a history of paying dividends to its shareholders. This practice is evident from the information provided on pages 10 and 36 of the extracted summaries. On the other hand, there is no clear indication that the company has bought back shares. In fact, page 52 explicitly states, "not mentioned," suggesting that share buybacks are not a part of the company's strategy. Furthermore, page 63 highlights a restriction on buying back shares due to debt facility covenants, which further supports this conclusion. That concludes the financial summary for Wynn Macau Limited. Feel free to comment below, and I will be happy to answer them when possible.